You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
All right, everybody. It's Tuesday. Mixing things up here a little bit on the network because, hey, our schedule got a little mixed up due to the President's Day holiday here in the U.S. Not our fault. Everyone needs a good break. We're not savages here. We're not going to make all of our hosts come in and do duty when the when the markets are closed. But we're back at you here doing something a little bit different on Tuesday. Markets are running wild out there today. We know you guys missed us. We hear you over the weekend. We hear you even on the holidays on Monday. And so we thought, rather than getting everything scrambled together for a last-minute interview today, let's do something a little bit different. Let's do a little quick Tuesday options rundown. Cover all the hot things that are lighting it up right now. Volatility, going to talk about that. What's lighting it up out there from a most active perspective. Which names you guys actually slinging out there right now. Spoiler alert, a lot of freaking paper on the tape out there as well. Going to talk a little bit of crypto. Yeah, that one's moving. We'll get to that there as well and a whole bunch more. Nat gas has been lighting it up. Energy, going to get to all of that here. So let's get started. Let's just do it. Kind of something fun, something a little bit different here to mix up your trading week, mix up your Tuesday. And it was an active one coming into showtime. We had the VIX right around the 21 handle, about 21.15. That, of course, puts it north of the 20 handle, but if you paid attention, you saw a lot of people on FinTwit and VolTwit last week and everywhere else in the broad market kind of losing their minds that VIX closed below the 20 handle for the first time in about a year, talking about a 1998 and that level over there in terms of price action, not year, obviously. So just a tick, just a wee bit shy of the 20 handle. A lot of people were running with that, saying this is it, this is the beginning of the worm turning, the bull is now in full effect, and can't really be blamed if you're out there believing that. Certainly, if the bull has been running for quite a while, it has the bit in its teeth. But I encourage you, if you do believe that, check out our Volatility Views program if you haven't already from Friday. We broke it down there, and it just shows, remember, we said this before many times, the cash is interesting. It's an indicator, but it's not the tradable asset at the end of the day. For that, you have to go out to the futures and the options on said futures. And those are telling a very different story. The VIX futures a few months out are pricing in a whole heck of a lot more volatility than we're seeing in that front future, and certainly is being reflected out there in the cash, which remember is just really that 30-day barometer of volatility. So the VIX futures, which are the real tradable assets, that's where the big pension funds and the insurance companies are going out there to buy their risk, buy their tail hedge risk for the marketplace out there. They're bidding that up. So there is a lot of concern going forward that there is more vol. So yeah, it's nice if you want to see this as the sign that the bull has the bit in its teeth for a little bit. I wouldn't hold it against you, but before you go diving in with both feet out there, check out Volatility Views and take a look at that VIX futures term structure. It may give you a little bit of a different perspective on what's going on out there. Also, other products are lighting it up. VVIX, as you might imagine, VIX swinging below 20 and then back north of the 20 handle. VVIX is rocking and rolling again, up to about 122. That puts it up about 4 handles from the last time we talked about it, at least on the option block last week. A little bit different from vol views there. VXX, a product you guys like to fade. Getting the fade on again. It's about 1560 coming into this show anyway here, so well shy of the 16 handle yet again, down about 1.4 points or so from our last option block there on Thursday. Vol Q at about 23.5. That puts it up very so slightly from our last show, about 0.75 of a point out there. In terms of what was lighting it up out there today, it was a pretty active day for overall options activity. The VIX, as you might imagine, breaking through 20, getting a lot of headlines out there. That translated into a lot of paper today. 1.01 million, just a tick north of the 1 million category out there today. So that's nothing to sneeze at out there. And that, of course, puts the ADV, which hasn't taken up for a while, it's up to about 689,000. So the ADV closing in on 700K. That's nothing to sneeze at out there in VIXland. Our old friend SPY also doing some paper, just a little bit north of 4 million itself, 4.15 million out there in SPY land. That puts it pretty much a little bit north of its ADV, which is now a little bit north of 4 million, about 4.07 million. So it actually managed to eclipse that out there today. The S also doing some numbers, about 1.25, actually 1.27 million to round out the day there. The ADV is 1.2 million. So, the ADV has been ticking up. And that's a pretty strong day for the S, which has been kind of lagging out there of late, ever since the pit encountered its issues, shall we say, back in March of last year. SPX has been kind of one of the leading victims out there. The volume never really recovered out there. In terms of what we're seeing in Q land, a.k.a. the NASDAQ, decent paper on the tape, 854,000 contracts today. That's a wee bit shy of the ADV, which is 969,000. That also has ticked off a little bit. That was north of a million not too long ago as well. So the Qs are pretty active, still pretty juicy out there, but not quite as active as they have been of late. In small caps, this is where all the action has been of late. Listen to shows like Twyford. People are just obsessed with all things Russell 2000 in particular. Those 5 delta and below calls. A decent amount of action on the tape today, but not blowing the doors off. Let's go out to IWM. I know it's a vehicle a lot of you like to use to trade. The Russell 2000, 576,000 contracts on the tape. The ADV, 755,000 out. Let's go out to the most actives, the single names, what you guys were actually slinging, and it's a weird mix out there for top 10s today, listeners. You guys are slinging some weird stuff, but you have been for a while now. Number 10, good old Tilray back in the top 10 there, coming in at number 10 with 349,000 to break into the top 10 these days, listeners. That's really just something else. That's usually about at least 100,000 more than it typically costs. So that shows you it was a pretty active day out there. Number 9, AMD, and all these new names are breaking into the top 10. AMD manages to hang in there every day. 360,000 contracts to number 9 for AMD. Number 8, Microsoft, also clinging tenaciously to its top 10 spot. 415,000 contracts. Number 8, we're already north of 400K listeners. Number 7, DNN. Good old Denison Mines, 440,000. If you listened to the option block last week, we profiled this one. It was lighting it up as pretty much one of the weirdest trades we had seen in the odd block, something around 270,000, very far out of the money. March 2.5, I believe, was the strike calls. We're lighting it up on a stock that was trading at the time shy of $1. That qualifies as weird. I think maybe we'll get into that more a little bit later. But that had some interesting paper. The calls were trading 300+% volatility. It was insanity out there. And that one is one I know a lot of you were fixated on. Number 5, NIO, back to Chinese electric vehicles, 543,000. Number 6, we're already over 500K. Number 5, this is a newcomer to the odd block. This is CCIV. This is Churchill Capital Corp. On the rampage out there today, up 31, almost 32% to $52.70. It's also good for 571,000 contracts out there. So this one just lighting it up out there. This is another one that has a deal in the works with some EV makers, and that's obviously shining a lot of that EV light because what's right above it? Number 4, it's Tesla, 714,000 contracts. Number 3, Sundial, knocking Tesla down a little bit, 716,000 contracts for Sundial. Number 2, Palantir, also toppling Tesla, 1.25 million. Palantir came within a hair's breadth of toppling toppling Apple, listeners. Apple's 1.27 million, Palantir 1.24 million. Palantir just had earnings. So that's obviously the post-earnings blush. I should also point Microsoft is going ex-div pretty soon as well, so that's probably inflating some of the numbers out there. But still, a fascinating top 10 if ever there was one. Let's go on out to the crypto side. Didn't have a chance to do the crypto rundown yesterday. Let's squeeze some of that in here as well. I know everyone and their mother seems to be fascinated with Bitcoin and all things crypto right now ever since Mr. Musk decided to gobble some up out there. Coming into this show time at least, Bitcoin was shy of that 50K level, about 48,350, but it did break the 50,000 level ever so briefly earlier today, 50,311. Other venues have it at about 50,500. Kind of depends on the outlet where you're looking, what price they have for a high, if it's CoinMarketCap, if it's CoinDesk, if it's different exchanges. They all have different prices. But it was somewhere around that 300 to 50,500 level out there. So action of plenty out there. Puts it up about 5,500 handles from our last crypto rundown we did last week. So obviously a good run out there in all things Bitcoin land. The hourly volatility, remember, that's how we analyze it in crypto land. It spiked up to about 133%. That's pretty juicy. That was back almost a week ago, actually about exactly a week ago. That was on the 9th. So yeah, a week ago it spiked up to then. It's been drifting down a little bit, but it's still juicy at 112.3%. So this little flurry over 50,000 kept it pretty juicy. ETH also fairly juicy. 1735 coming into this rundown. That puts it up about 38, almost 40 handles from where it was on our last show last Monday. It topped out right around 1860 or so earlier this week. So threatening the 2,000 level, never quite getting it out there. But of course, the vol still really juicy. ETH, if you've been listening to Crypto Rundown for a while, ETH has had a little bit more structural vol than Bitcoin of late, even though Bitcoin can spike up there. But ETH's been north of 100% for quite some time. ETH is 1 hour vol, 122 now. So Bitcoin and ETH, Bitcoin's starting to catch up from an overall vol perspective. Let's see if Bitcoin can maintain these levels, which ETH has done for some time, or if it's going to trend down. And even good old XRP, good old Ripple had a good run, up to 64 cents earlier this week. Coming into this show, had about 51 cents out there. So I'd given up a lot of that, but still a good run from our last show, almost about 7 cents. We've seen it for a while now. There seems to be someone out there lurking around the 75-cent level, in this case maybe 65-cent level. There seems to be some big sell orders that come in at that level. So folks who've been holding on to XRP for a while, once it gets up to a 2x, 3x run for them, they like to unload some of those. So that seems to be the case out here again. XRP hitting some lofty heights, then retreating back down from them. Everyone's talking about Doge, or a.k.a. dogecoin. It's everywhere. You can't escape it these days. It was in our top 10 not too long ago. It's out of it right now. Doge was off about 13.25% just today. Since we're talking top 10, let's do it out there right now. Our top 10 for the entire altcoin universe segment that we usually do on our crypto rundown. You got to go all the way to number 13 to find Dogecoin with a market cap of about 6.6 billion. So obviously knocked out of the top 10. Just in the top 10 last week. What took its place this week? What knocked it out? Chainlink. Number 10, 12.7 billion. Number 9, Bitcoin Cash, also 12.7 billion. Number 8, Litecoin, 13.5 billion. Number 7, Binance Coin, slowly climbing its way up there, 19.7 billion. Number 6, our old friend XRP, 23.3 billion. Number 5, Cardano, 26.5 billion. Number 4, Polkadot. Gotta love the names. If you're not a crypto head, it's just fun to hear the names nonetheless. 26.8 billion out there. Number 3, Tether, firmly glued at number 3, 32.5 billion. Let's see, number 2, ETH, of course, 198, just a tick under 200B. And Bitcoin, man, we were just joking not too long ago. What's going to hit the 1 trillion market cap level first? Will it be Bitcoin? Will it be Tesla? Bitcoin at 900 billion. It is a lot closer to the 1T level than it was not too long ago. Before we jump out of this real quick options rundown here for your Tuesday, a lot of headlines, a lot of talk about all things nat gas. Let's go on out there as well. You guys, and this report can generate it for yourselves, cmagroup.com/TWIFO. Go to the energy drop down, go to nat gas. All you have been asking us questions about what's going on with nat gas skew. You may have seen some crazy, outlandish reports of nat gas prices reaching absurd levels out there. We saw a lot of rolling blackouts as a result of this massive storm sweeping through the Southwest in Texas and other areas. And so as a result of those blackouts, it caused a whole bunch of issues with nat gas delivery. The pipelines were actually frozen, so there wasn't much gas that could get to those markets. So in those theoretical areas, we saw absurd spikes. Over there on CME, where the nat gas futures were actually trading, they had a good run. They settled at their highest levels since about November of last year, a little north of 3, about 3.12, almost 3.13. Coming into today now, they're getting up a little bit of that. They had about 3.11 in that front future out there. That has about 7 days to go, if you're wondering, by the way. Let's see how much action was on the tape this week. 167,000 contracts. That's a pretty active week with about, get this, listeners, 82% of that So pretty much all that paper coming in that front contract. This was all front month, all got to have it right now type of paper. If you're wondering the vol out there, again, this is about 7 days to go contract. Usually we cut it off at 14 because things get a little outlandish, but still, this is where more than 80% of the paper went up this week, so we have to focus here. The vol, 84.5, up 23.3 points. The skew out there, let's see what's going on. Last week, the puts were 10.7% cheap to the at-the-money in this contract. This week, 12.9%. So puts getting a little bit cheaper. Calls, 16.2% rich last week. This week, 11.6%. So I guess as we broke through some of those call strikes to the upside, some folks taking those off. You might expect to see a bit of a scramble up there to keep those calls elevated, but actually the call skew coming in. Let's see what the most active contract out here this week was. The 3/4 calls. That makes some sense, doing about 33,000 contracts this week, listeners. Again, that's all really today. This week is today because Monday, of course, we were closed for the President's Day holiday. So a lot of paper on the tape. 33,000 of these 3/4 calls, followed by 23,000 of the 3/2 calls, 12,300 of the 4 calls, and about 11,000 of the 3 3/4 calls. So that's a pretty juicy call strip going up there for about 75,000 of that 160,000 contracts coming in those 4 call contracts out there. Let's look really quickly, see any other weird paper. No, that's kind of about it. It was all upside calls all the time. And interestingly enough, the skew coming in, so I'm guessing some folks may be taking the opportunity to fade, or if they had futures on against it, they were dumping calls to the upside. Either way, that call skew coming in pretty aggressively, which is kind of interesting. We'll get into this more on the full Thursday show on TWIFO, those listeners. Before we go, let's look really quickly here. Also in the energy complex, let's go on out to WTI, a.k.a. crude oil, a.k.a. the energy product. A lot of you guys and gals like to watch out there. It's at the 60 handle, 60.10 right now coming into today's show. Up about 1.06% today, and a decent run here on the week here as well. The most action this week, about 23% coming in this April contract that has, looks like about almost 30 days ago, about 29 days to go. So that's a little bit saner measure from an overall contract perspective. The vol out here, if you're wondering, 32.10. So I just talked about Bitcoin and ETH well north of triple digits. WTI at about a third of that, 32, actually a fourth if you get into the realm of ETH out there. So yeah, juicy. It's up about almost a point, but nowhere near some of these other products we're talking about out there. In terms of skew, puts last week, 9.2% rich. This week, 8.8% rich. So puts coming in a little bit, but still pretty heavily bid. Not surprising as you break through the 60 handle. The calls, 5.1% cheap last week, 5% cheap this week. So effectively the same. They haven't changed. So calls a little bit of a discount here. So fading maybe a little bit of the continued move north of the 60 handle. If you're wondering what the most active contract was out here this week, let's go out here. Looks like it was the double puts, well, just to here north. These were 6,307, followed by 6,293 of the 60 calls in March that go out tomorrow. So interesting stuff here, but the 62 calls were where the action was out there. Again, I was looking really quickly to see if you see any weird aberrant strikes on the list. Remember, you guys can do this for yourselves. CMEgroup.com/TWIFO is the place to go. So that was 60 calls in March, and then but the actual number one by just a couple of contracts was the double puts in April, doing 6,300 contracts out there today. It was followed by almost 6,300 as well. It's a magic number, 6,300, for the 62 calls, also in April. So a little bit of interesting back and forth. Obviously, we don't have OI change numbers for these because they just went up today. But still, fascinating stuff. Of course, actually, I take this all back, listeners. The number one trade out here so far this week. This is why I like to hit select all. You have to scroll down a little bit to find these. But it was actually the December of 2022 par. Yes, the 100 calls going up 28,000 times today. You might say, well, that's nuts. Well, that's also followed by 14,000 of the 98 calls in DEES 2022. So it looks like we got a little bit of the old 1x2 action there. 98 par. 14,000 by 28,000 contracts. That is extremely strange, extremely tight. December 2022, Crude oil back to $100. What do you guys think about that? And what do you think about a 1x2 that's 2 points wide for 14,000 by 28,000 contracts? That's got some action on it out here. So a lot of stuff to analyze over here this week. We'll get to more of this again on Thursday. Let's look really quickly from an earnings perspective. Still have some earnings popping off. You guys can find all these for yourselves, theoptionsinsider.com. Click on the Options News and Articles tab, top right corner of the homepage. Wednesday, so tomorrow we got Shopify, Hilton, and Marathon Oil back out into the oil ramparts there. Thursday, Walmart, Waste Management, Blue Apron, and Marriott. Marriott had some big news. Their CEO passed away today, kind of shockingly. And Roku, Friday, John Deere. So still some big names for you guys to analyze. You know where to get all that. TheOptionsInsider.com. Speaking of where you know to go, you know where to go to get at us with some of your questions. Let's take a couple of these before we go. A regular listener here, J3 Dingle, chiming in. I think he's talking about our interview show from last week where we did with the CEO of the Options Clearing Corporation, John Davidson. J3 Dingle said, wow, Mr. Big said that what you do is vital. I bet that felt good. Well, it is always nice to be appreciated out there, J3, for what we do, because we do work hard to bring you guys the content out there. So it's nice to see that the folks at OCC, or as you put it, Mr. Big, appreciated it. But we do it for you guys at the end of the day, not for the guests. If they like it too, that's a bonus. But we're happy that you guys like it at the end of the day. Let's see. He also mentions, are you slinging uranium? Yeah, that goes back. We were talking about it on the show, listeners. That DNN, that Denison Mines, they are a mining and resource exploration company, including in uranium. And in fact, that's what a lot of that massive options paper we talked about last week was. As a part of that, they had a corporate action where another company came in and I believe agreed to acquire about $25 million worth of their stock, around 91 cents. And then also had warrants to buy about half that amount again in warrants. A lot of that was obviously reflected and expressed in that, I believe, 270,000 call contracts that came in to buy on that 2.5 strike in March. Yeah, I couldn't resist when we were talking about it, Jay. They were paying 300+% for the stock was trading around $1. They were giving you 30 cents of that back as like a rebate to sell the call. Of course, I did it a few times out there. And it looks like DNN, looks like a lot of you did, because those calls came in pretty aggressive. A lot of people discovered that, you know, one of the hopes for that trade was that there were so many short contracts on that strike, we might see one of those nice little gamma squeeze effects, as well as the entire market-making community would be short hundreds of thousands of those. Effectively, it would have to suck the stock up a little bit. But it seems like the trading world decided that 300+% vol was too good to be true, because they annihilated that strike. So I'm guessing the market makers were able to buy a lot of those back. Unfortunately for them at inflated vol levels, but I think I got one of the last 25-cent kinds actually off on that, because that vol collapsed. I actually got a partial fill on one of the ones I was trying to work. 25 cents went away pretty quickly. So, yeah, the market seems like they came back in. Saner heads have prevailed. If you look at it right now, I think the stock's up around 50-odd cents. It's trading around $1.50, and those calls are trading, I think, for 32 cents, something like that. So the vol has obviously come in quite a bit. But it was a fascinating thing to watch and an interesting trade. I know a lot of you guys were watching it out there as well. I couldn't resist. 30% rebate on the stock, why not? For a fun little flyer, not putting your kids through college money, but it's a fun flyer nonetheless. Let's see here. Really quickly, Revon Gorges says, I heard your show live, as I always do. Well, we appreciate that. I tune in live to listen to some education. Maybe you guys can talk about how us listeners can find what stocks have the most open interest or most volume on the day. I currently use bar chart. Is there something better? We just had a similar question like this not too long ago. I think it was on the option block where we discussed this, maybe vol views. But I use kind of a proprietary mix of things that I've been using for a long time. Some of them, of course, cost money, so that's one of the downsides for you folks. We've been using Live Vol since the inception over there. We still use a lot of that for some scans. Trade Alert is another one that I use quite a bit. I've known Henry and his folks over there since their inception as well, so we were kind of one of the early users of that platform. Once you build up a workflow and know how platforms work and how they have very powerful search tools under their fingertips. I mean, something like Trade Alert is searching the entire Opera system effectively. You can find whatever you want out there. That's going to be more powerful than what most of these retail brokers bring to bear, which is what most of you guys out there are using. Bar charts are fine, free one if you just want some volume updates. Not as much on the options side. They're more on the futures and Delta One type stuff. They're trying to grow some of their options offering. So if you want that free stuff, I don't know what your broker is, Revon. Different brokers have different offerings for free, and I'm pleased to say they are improving in terms of search functionality. But if you want to really build a good quality scanner, you're going to really have to still pay for it out there, whether it's a combo. Now that SIBO owns, Live Vol and Trade Alert, a bunch of other things, maybe they'll put together some sort of combo package for you folks out there. I've mentioned that to them a few times. Maybe they'll get in on that and allow you guys to buy the kind of one-stop-fits-all kind of pass effectively to all of their data. And you can go in and just create your scanners and everything else till your heart's content. So that's what I like to use. I've talked about this before. I think maybe we will do this, some sort of compendium of the scanning tools that are available for free for you guys across most of the major options trading platforms, which ones we like, which ones we don't like. And we can I was just playing around with the E-Trade one the other day to kind of see what they offer out there, trying to get a sense for what you guys are dealing with when you're out there trying to build your own scanners. They had some interesting offerings, but it wasn't exactly maybe the soup to nuts thing I was hoping for. So that might be a fun little research project for us here to kind of dig into the weeds a little bit and see what you folks are, quote-unquote, stuck with out there. But interesting stuff. That's what we use. And again, I think there's more to come on this topic, so stay tuned. And, of course, stay tuned throughout the rest of the week. We're going to have our Education Wednesday hitting you tomorrow. Double dose of Options Bootcamp, Options Playbook Radio. You guys had a ton of questions for those shows. We'll be answering those tomorrow. Thursday, back again with Twifo and the Option Block. Friday, Volatility Views. Then it all kicks off again next Monday with another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.